Good to be with you.
All right, President Trump attending the G7 summit in France right now after reaching a deal to end the conflict with Iran and open the Strait of Hormuz. Stocks are rallying and oil is falling to a 3-month low, now around $80 a barrel. Yes, indeed, $80.56. Shoot, we're almost at 79. Mediators are setting up a signing ceremony on Friday in Switzerland, a moment they say is transformative.
Very happy to say very signed, the deal's all signed, and the strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found, but it's essentially ships are starting to go out now. On Friday, it'll be completely opened. We got along very well with Iran. It's a different set of leaders.
All right, David Boston, you're not a guy who takes things at face value. You always look underneath to see what's really going on. So what do you think's really going on? Do we got something here that's as positive as markets are calling it right now? What do you see?
I don't think markets are calling this positive. I think it's a very 1%, 1.5% move is what you'd expect. We're still way lower than we were in some of the riskier elements. I think that markets are responding the way you have to when you got to remove hedges and the initial high volatility. But this is upside volatility. Okay. People like this kind. You've seen a lot of the downside volatility days. If you're asking me the substance of the deal and whether or not Iran is now trustworthy and all that, I don't know.
I don't know
if anybody
Iran's
knows.
Trustworthy. Okay.
I would hope that is true.
Even if they're not trustworthy, do you like where things are trending here? Is America in a better spot at the end of this than the beginning?
Brian, things are trending where markets have expected them to trend for several months. That we're going to get to some form of a deal. There'll be some things in it people liked and some things in it people didn't like. That, I think, has been inevitable for at least 2, if not 3 months now. And I think that if the Strait of Hormuz gets reopened and oil gets flowing, I do not think we're going back to 65, but we're way lower than 95. So being in that middle ground is a good spot.
Because a lot of people have said that. I think on Friday, Lou and Marcus said that we're not getting back to 50s or 60s either where we were before. They said the inflation-adjusted price, we're going to be at 70s. Why? What's stopping us from getting back to the 60s where we were before the conflict?
Well, first of all, even in the 60s, we were probably on the low side relative to where producers want to increase supply. So there is a flux between supply and demand. And with oil, it's more exaggerated than any other commodity on Earth. You can't flick a switch and get production back on the next day. So there's a lag effect, and it's a global commodity that's denominated in dollars. Some of what happened over there in the Middle East takes production off, like with liquefied natural gas in Qatar, for example, not for till the deal is signed, but for months, if not even a year, year and a half. U.S. production kicks higher, but refinery spreads are still wide. So there's other economics besides just Strait of Hormuz, but there's a risk premium now. We now know that in the Middle East tensions, as things stand now, things can get shut down for a prolonged period of time. That leaves the floor higher than it was before, but the ceiling is a lot lower now with Hormuz hopefully reopening.
Even with Venezuela, I know Venezuela isn't up and running now. We're not producing like multi-million-dollar barrels of oil, but I think...
But we will be.
Yeah, so how does that sort of factor into the conversation of bringing Venezuela online to offset some of the lack of production or the extra risk premium that you have more in the Middle East?
It would help it, but it doesn't help it instantly. It takes time to get assimilated. And then let's keep in mind, as we're dealing with all these supply-oriented issues, what took place in the last few months was a pure textbook supply shock. We're taking for granted there's no demand-oriented issues. So theoretically, you want to hope demand stays high. If demand were to drop, that also changes things. There's a lot of moving parts.
Well, you've said many times, Dagan, one of the key features of this whole episode has been China curtailing demand big time. If we get a positive move with the Strait of Hormuz, do they ramp up demand? And could that offset some of the drop in oil that we're expecting here?
Yes. So exports or imports into China fell, 40%? The equivalent of consumption by Germany and France combined. And that people are still, Javier Blas has written about this, still trying to figure out how they managed to do that. Did they have their own strategic petroleum reserves that were much larger than people thought? Is the economy weaker and they're consuming less crude and fuel? That being so, if they ramp up consumption, there's the offset there. But speaking of Javier Blas at Bloomberg, what is remarkable, this is the biggest supply disruption ever, and it didn't cause an energy crisis. That the shock was worse in terms of supply, worse than 73, 79, and 2022. And the cost of oil, natural gas, electricity, and coal never hit the previous highs.
Yeah.
That's how, and so whether you love, like, or dislike President Trump, the backdrop of all of this, of the Iran conflict, is you have a strong energy economy in the United States, and one that is going full bore or can go full bore. And we are the biggest exporter in the world right now. We are producing in oil, what we were producing last year, to David's point that you haven't had, and Taylor was watching the rig counts every week, you haven't had the additional production come online in the U.S., but certainly we were exporting as much as we could. We were distilling as much as we could because the refinery runs did ramp up. This is a administration that embraces fossil fuels to our benefit and the world's benefit.
Jerry, you're a runner more than I'm a runner, but this economy often felt like a good runner with ankle weights on. You know, you knew that the economy was strong. It was probably getting stronger, but it wasn't moving as fast as it could because of the ankle weights of oil prices, gas prices.
What a metaphor. The only problem with it is that I am not a runner. But other than that,
I see you in the gym all the time, so I assume you're a runner because I'm never on those machines. You were talking earlier about how these markets powered forward, even in the midst of all of this conflict.
Right.
Is this going to be a little bit like that runner with the ankle weights off?
Yeah,
now, even if we don't get $65 barrel oil, if we get mid-70s, okay, we could. I mean, this week we could see $70 on the
Look,
handle.
you see
What do you think?
lots of great things in the economy. You see the employment, when I look at the consumer numbers, there are some signs of distress, but there's also an incredible amount of spending that just continues, which is amazing. I was going to say, ex-China demand for oil, demand for energy broadly is huge and massive and continuing to grow, which is, tells you something good about the economy generally. But I think it's interesting that, this economy just keeps spinning up, and I think AI has a lot to do with it.
Politically, David, what do you make of all this? So we have talked about the midterms and oil and affordability, okay? And some of us on this panel have said, forget about the midterms, do the long-term thing. But there are midterms this year. Gas prices have been coming down a lot lately. My guess is if oil continues to come down, that trend will continue. Most of America will see gas in the below $3.50 range. You could get back to the scenario where you've got a lot of places seeing it with a two handle in the front of it. Does that make a difference in terms of where you think the midterms might go relative to what you were thinking, I don't know, 3-4 weeks ago?
Only perhaps marginally. I think people misunderstand what motivates midterm voters, that these are more engaged. It's not a mere headline, how are you feeling? I'm feeling worse economically. I'm going to go take it out on my local congressman. That's a much more presidential election response with the economy from a macro standpoint. Ultimately, I think that you're going to have a margin for error around this, but the Republicans are going to keep the Senate barely, and the Democrats are going to take the House barely. And I think that would have been true at $50 oil or $100 oil.
Yeah.
But I do think, because there's just bigger factors going on right now in approval ratings and overall situations, politics covers a lot of categories, and there's cultural considerations. I want to point out the biggest vulnerability in the economy was never oil prices. It affects consumers who it's a larger percentage of their monthly wallet share. But the biggest issue I'm looking to, because you brought up longer term, is that we have absolutely no business investment right now outside of AI. AI is huge. It's good. It's carrying the economy. Fracking carried the economy in the Obama years. We were totally dependent on business investment from one sector, and that wasn't enough to get us back to 2-3% growth. We just stayed around 1-1.5% growth. There's a lot of good things in the economy, but that's the biggest vulnerability I'd focus on, is why we're not getting more capital investment outside of AI.
Is it just because it's the biggest opportunity in a generation, and if you've got capital to spend, why wouldn't you do it trying to figure out your AI play?
I don't want to front run my market check, but my next market check will hint on some of that.
It is expanding, though. It is widening out in terms of CapEx. It has started in just recent weeks. And are the exponential gains from AI greater than hydraulic fracturing in terms of the economic growth that you would get from AI spending?
That's hard to answer because the people spending the money don't know. They are saying we have to go compete for market share and spend hundreds of billions of dollars because we just need to not be in second, third, or fourth place.
Right.
With fracking, we knew exactly, and you alluded to it. I'll give President Trump tons of credit for energy independence, but the energy independence story of America's capability started even before him with fracking, right? With shale revolution. We did it for ourselves. It was geopolitical advantage, it was military, and of course economic. But I don't think that, my point is that the economic growth will be bigger or smaller as much as it just can't be felt by everyone if it's only in one sector, because it doesn't get distributed as evenly. Ultimately, what we want is AI revolution that opens up a lot of doors for every sector. And I think that is yet to be seen, but I'm optimistic. But I'm just saying, as a supply sider, I would have thought the benefits of Big Beautiful Bill Act with tax incentives for business spending would have been bigger by now than they've been.
Right.
So I'm hoping, and then I'm such a small business-oriented guy, I can't stand seeing the surveys over and over. All the optimism for huge companies is through the roof. All the optimism for small business has gone away. All intentions to hire 250 or less employees, 50 or less employees. No intention to hire. That bothers me. But I hope it picks up.
But there's actually, you can compare the hydraulic fracturing movement, and I don't say fracking because that's so, Russian disinformation to make it sound like something nasty, to AI and the backlash that's brewing against AI and the rising populism and the danger therein lies.
Yep.
The good news, industrial production numbers we got this morning, up 4% in the period of the war with Iran, but it's all led by high-tech production, which is up 23% on that basis. But the output of business equipment is also up at an annualized rate of 11%. So you're getting good factory stuff, but again, the concentration, I think, is what people are.
And I think it's negative apart from the AI expenditures. Yeah.